Well, let's check out where Netflix is trading in after hours. We did see it tumbling quite a bit as the results were released. However, we're seeing it down just 3% at this point. It was down about 12% initially. It's a bit of a mix here in Netflix's results. So first quarter revenue came in a hair under estimates, but it looks like the second quarter revenue expectation may be a focus for investors here. The second quarter revenue came in a touch below, so $8.24 billion versus the estimate of $8.47. The streaming paid users was also a big focus, and that came in at an addition of 1.75 million. That is below the estimate of 2.4 million paid users. To dig into these results with us, we're lucky to have Matthew Harrigan on the line, a senior analyst at the Benchmark Company. Matthew, thanks so much for joining us.
Thank you.
So what do you make of Netflix's initial results here for the first quarter? A hair under on revenue, but it looks like the net change in paid users is slightly lower than expected. Well, quite a bit lower, actually. 1.75 million versus almost 2.5 was the estimate.
Well, I think the first quarter was satisfactory. You know, they gave guidance for people were expecting approximately 1 million. I mean, that's where I was. I mean, the company is not giving formal guidance on member growth anymore. But Q2 was the intimation is really lackluster, kind of 3% plus handle on the revenue growth. I was expecting more like 5%, and operating profit actually off slightly from last year. You know, I think the street was largely expecting high single digits. And this is not an inexpensive stock. I mean, they did take up the free cash flow guidance to $3.5 billion from $3 billion, but that's less than a 3% free cash flow yield for a company that's just generating 3% revenue growth in the next quarter. And realistically, I mean, people are looking for an inflection point off the initiatives on the password sharing crackdown and the AVOD alternative. And I think it's certain that it's going to take a while to get momentum. It actually amazes me how well the bulls do in defending the stock. You know, I would have thought that it would duck below 300 and stay there, but it looks like it's determined to hold above 300, at least until we get the video review from the company.
Yeah, because you've got a sell rating on Netflix.
Yes, we have a 250 target. You know, we think a very optimistic target that really gives them a lot of latitude for AVOD, and the password sharing crackdown would be kind of 285. And I think there's probably some down risk to the 250 number. I mean, to really justify the valuation, you practically have to go out. You have to go out into the late decade, and to get really excited about it, I think you have to go into the 2030s and assume that there's a very long, growth path in emerging markets and all that. And I think it's very suspect. I think it's much more of a media company than a tech company. They certainly have a better user interface than anyone else, and I think it's a better experience just navigating through what they're offering. But it's a very competitive business, and they're up against some fellow gorillas in terms of the large tech companies and the traditional media companies as well.
Matthew, when it comes to these paid users, of the ad side of things for Netflix, do you think Netflix is getting off to a slow start with this advertising tier, or is it a sign of an actual lack of interest in it?
Well, I think that it's certainly early, and there are some reports on Bloomberg actually that they were doing reasonably well on the AVOD right out of the blocks in the U.S., but it wasn't clear what the extent of the cannibalization was. Certainly adding 1.75 million globally suggests that there isn't a big bump on a net basis immediately. And anecdotally, it does sound like in Latin America, where they really ran, a few of the beta markets, for cutting down on password sharing. It really suggests that there's not a huge amount of there is some resistance. And then on the AVOD side, it sounds like most people are preparing to keep prefer to keep the SVOD, no advertising alternative. So it's going to take a while to get traction. I mean, I think everyone in the market is moving toward an AVOD, offering. There's going to be a lot of competition. But I really think it's a necessary move that arrests some of the competitive deterioration as opposed to something that really opens up a huge new growth path.
When it comes to Netflix's outlook for the next quarter as well, it looks like they're expecting new customers in the current period to be roughly similar to the first period. So, I mean, again, on the subscriber side of things, that could be could that be a sign of people maybe they might change plans, but maybe not necessarily attracting, like you said, the new customers to this new offering?
Well, to frame it in context, they were actually indicating at the Q4 letter to shareholders and the call that they expected a nice acceleration pop in Q2. They thought they'd get some resistance on the password sharing initially. So I think saying you're going to have a comparable number in Q2 is actually disappointing.
We also learned that the company is delaying its plan to crack down on password sharing in the U.S. How significant do you think that is?
Honestly, I haven't gone through the whole release and the video conferences. It clearly won't be out for a while, but I would take that to indicate that they are wary of going overboard in this environment. And certainly in Latin America, the early anecdotal indications out of the markets where they have tried to crack down is not particularly positive. So I think they have something that has to be very carefully developed and navigated over a period of time, as opposed to something that really magically inflects the numbers on an upward path. There's nothing in this earnings announcement that really makes me happy. And again, I think the context is we're looking at 3% plus revenue growth in Q3 or Q2, and $3.5 billion in free cash flow and roughly $150 billion market cap. Do the math. I mean, this is neither growth nor value. It's really in no man's land, and I don't think it's going to get out of no man's land for quite a while.